Hey everybody, welcome to the Real Estate Note Investing Be the Bank Meetup for December 2020, our last meetup for the year. Hope you guys are doing very, very well this December and you've gotten through the all the COVID stuff as best as you can. I know we've all had our challenges here and there. I don't know how many of you have kids that are doing virtual learning, but I definitely appreciate teachers more than anything now after doing some virtual learning with the kids. We got 4 of them at home. So it's been challenging. We got a 9, 9, 7, and 6-year-old. So we got, let's see, kindergarten, 2nd grade, 3rd grade, 4th grade. So it's quite the handful when it comes to e-learning at the house. So shout out to everybody that's doing e-learning at home. I know it's tough. I can't wait for things to get back to normal. That's for sure. But anyways, we're not here to talk about that stuff. We're here to talk about real estate and note investing, right? So that's me. I'm Justin Bogard. There's my information, justin@brightpathnotes.com if you need to get a hold of me. We got our company is Bright Path Notes, and we have social media handles. We got Facebook, Twitter, Instagram. We got a Vimeo account, and I guess that's our educational platform that we use for educational videos and stuff. So we got our Note Versus series and our 10-year model that we put out there. Our 10-year model we put on our website. I'll have to make that more clear. I have a LinkedIn page, so feel free to reach out to me on LinkedIn if you want to connect there. I know a lot of people connect on LinkedIn. We got a lot of new faces and new people here on the call tonight, so I really appreciate that and hope we provide some great education for you today, and it's well worth your price of admission, which was free, right? Just part of your time. Just a little disclaimer here. I'm not an attorney. I'm not a tax consultant. I'm not a financial advisor. I'm just a note investor. So anything I talk about is just through my experiences and experiences of other people that are in the business that I know of. And that's the best way to learn, right? Is learn through someone else's experiences, because you'll learn some of that today of some experiences that I have had recently as well. So this meetup would not be possible without some sponsorship. And so my company, Bright Path Notes, our slogan is, we've got the deal flow to make your cash flow. And again, my email is justin@brightpathnotes.com. And we are the deal provider of the meetup here. We'd like to provide deals. So we definitely have sources of inventory, and we have our own inventory as well. If you go to our website, we have brightpathnotes.com/note-deals. You'll get to our note deals, or you just go to our page and you'll find the note deals. CIREA, if you're a local person here, you are familiar with CIREA. It's Central Indiana Real Estate Investors Association. So they're not a part of the national REIA, but they are a REIA here locally. And that's who I have membership with as well. And we are their subgroup leader for the note investing. So those members over there, which is about 800 or 900 now, they come to this meetup as well if they're interested in notes, and they're a part of this group. So if you're interested in being a part of our REIA locally here in Central Indiana, we got a big group, a lot of investors, a lot of different diversification in investing. You contact Vicki Perry, 317-670-8491, Executive Director at CIREA.club. They used to be .com, now they're .club. So check out their website, CIREA.club as well. When we have live versions of this, and I want to say we've had, January and February we were live at this place called Launch Fishers, and I think July we did a live one as well, and we streamed online. We just had a few people there in July. So we've been mostly Zoom all year, but when we do go live, we are at this facility called Launch Fishers. It's in Fishers, Indiana, which is just kind of the northeast kind of top of Indianapolis, 465 loop. If you're familiar with Indianapolis, I know some of you are not from Indianapolis. And that's a kind of a shared workspace, and we promote them because they allow us to use the workspace there. And they allow us to use their theater room there and in turn for some sponsorship time. So just want to give a shout out to Launch Fishers. They're a great company to have a membership with. So I go there often when we weren't quarantined as much, and worked out pretty well for me to have meetings and stuff. I like shared workspaces. Our other sponsor is Dickey Baldwin. You may have heard of Dickey. His company is the Baldwin Advisory Group. One bag for all your real estate services. Dickey Baldwin's number there is on the screen, as you can see, 936-447-4170. D Baldwin at baldwinadvisorygroup.com is his email address. Dickey is amazing. He's awesome. He's super responsive. He just won an award for one of the best vendors to use for BPOs and inspections out of a lot of other people that people choose from. Dickie won. He's a great guy. Definitely deserved a win for that. And we use him exclusively for our title searches and our inspections and stuff. And he's just great to work with. He's just a great guy. He's very honest, very thorough. He follows up. You couldn't ask for a better vendor to work with or partner to work with. And we love Dickie Baldwin. We're glad that he's a sponsor of our meetup. So thank you, Dickie. Back to Cyrea. Those of you that are in Cyrea, this slide is important to you. If you didn't know already, Cyrea has a couple of social media handles for Facebook, Instagram, and LinkedIn. You can see those. Take a picture with your phone if you need to. They have a YouTube channel that they definitely want to promote more. They have a lot of video content on there. And then more importantly, have these PHP credits. If you are going to this subgroup called Notes, if you're a Cyrea member, you want to enter in this URL into your web browser, or if you pull out your smartphone like this and you go to your camera, oops, I'm sorry, I advanced too far. You go to your camera and you hold it over that QR code, it'll come up without taking a picture. It'll come up and it'll have a URL come up automatically. You just touch the top part of your phone there and it'll take you to the URL, which is down there at the bottom, http://bit.ly/Cyrea notes. And they just want to log you in as getting some PHP credits. And it basically gives you some sort of housing partnership credits towards something to have more credibility in the business, right? But that's what you guys do. I have a podcast. For those of you that don't know me, I do have a podcast that I co-host with my good friend Super E. Her name is Elizabeth Sickles. She's a local investor here in Indianapolis, and she specializes in the short-term rental stuff, so like Airbnb and VRBO in short-term, and now I guess mid-term is what she's calling as well, rentals as well. So she does everything from, finding the deals to, maybe funding them herself or helping investors fund those deals and putting people in those houses to rent for her customers or for her. And so we have a good time chatting. We interview people. It's called the Two Wealth Show podcast. It's on pretty much all the podcast directories you can think of. Mainly, most people listening on Apple Podcasts. It's the most popular one, and Stitcher. We do have a YouTube channel. Bright Path Notes has a YouTube channel. We stream the recording of our podcast as well. So every episode. So we're getting ready to wrap up season 2. We will end that. We've actually recorded almost everything for season 2, except for one more episode. So we'll have 24 episodes this second season. And then the next season 3, will start in January, and we're already recording. We're going to be recording for that soon. And then we should get through 26 episodes in that season as well. We're going to I got some good interviews lined up with people in the real estate business. It's going to be great. It's very informative, very valuable information. We talk about a lot of different things. It's kind of fun. Appreciate it if you subscribe to it and like it. Well, enough about that stuff. Let's get into what we're supposed to be talking about today, right? And by the way, those of you that have not used Zoom before and you're not familiar with all this stuff, there is a Q&A button. There is a chat button as well somewhere in your Zoom bar. I think it's on your lower part of your screen. I have mine up towards the top just for convenience. And so if you have a question, feel free to go into the Q&A and then fill out your question. And then it'll post up on my screen, on a different screen for me, and I'll see that question and I'll answer it live during the meetup today. I've actually reserved some time at the tail end of the meetup today to ask me some questions as we're going through the meeting. And if you have a question about something, by all means, use the Q&A. There is a chat board as well if you want to just chime in and make a comment, or if you want to chat with somebody else that that's on the meetup right now, feel free to do so. That's what the board's for. Just don't do anything profane or unprofessional or just not cool, dude. Might have to boot you. We don't want to boot anybody. We want everybody to stay. So yeah, we have a lot of new people on tonight. Really appreciate that. Feel free to chime in whenever you want. If you guys can't hear me or if something's going wrong, please let me know so I don't start talking and you guys can't hear what's going on. Good question. So someone popped up, how does one find you on Vimeo? So if you type in Vimeo, if you go Google search Vimeo and Bright Path Notes, then you'll find me that way. Or you go to our website, brightpathnotes.com, and you'll see like a V as one of the kind of logos on the top right of our website. You click on that and it'll take you to the Vimeo website that's dedicated to us. And then we have our Note Versus series, which is 6 or 7 little 2 or 3 minute videos about notes versus other elements. And I want to say I put the 10-year model up there. I don't think I did. I think it's just on our website, just something new that we did a video on. It's pretty cool. It's about 16 minutes long. So if you go to our website, you see the 10-year model as one of the choices. If you click on that, it's going to be a 16-minute video. It's pretty cool. We talked about this a couple meetups ago. So thanks for pointing that out, John. So today is the December 9th meetup. Yeah. So the first thing we like to do for the agenda is we want to go over the note basics. I also give you a mortgage industry update. It's been very important this year because of all the COVID things and misinformation going on social media and people thinking we're going through this tsunami of foreclosures, and that's not even the case. It's so far from it. You know, we like to go over the facts, and we have a research team that we download the reports from, and we get the true information of what's really going on. And I kind of discern it for you, and I kind of take all the information they have and just kind of filter it down to some important stuff. So there's usually 4 or 5, 6 slides, and I'll just talk about those real quick. We have kind of an asset review. It's more of a due diligence and collateral kind of training, if you will, on what we call mom and pop notes. And I'll get into that once we get to that part of the presentation. And then at the end, I definitely reserved a good amount of time for us to answer questions that you may have about note investing. So anything related to real estate note investing, it doesn't matter if it's about today's stuff or just anything in general. No question is too basic. No question is too advanced. If it's too advanced for our topic today, I definitely can talk to you offline, and we can talk through some stuff. We've definitely done that before, but definitely feel free to ask questions. That is what we are here for, and you're here to get educated. So chime in at any time, and I will get your questions answered, or I will hold them to the end if it's something that we can cover towards the end. All right. Without any further ado, we will start moving forward. I see the board is clear. So the note basics, this is what I like to show at the beginning for those of you that have never done real estate before or even real estate note investing. It's okay. You don't have to leave. You're in the right place, okay? For the advanced and seasoned investors and for the basic and very novice investors, this meetup is still for you. So please chime in and give me feedback as far as what you know or what you don't know with questions about today. And I'm going to help guide you through this meetup and get your questions answered so you're not really lost or this isn't too boring for you. So we'll start off with the note basics. So when you have a house in a transaction, you have a buyer and you have a seller, right? And you have the house that the transaction is about. So the seller is on the deed, right? They own the property and they're selling it to this Mr. or Mrs. buyer. Excuse me. So when they go to the title company, the buyer is purchasing it from the seller for whatever price that they agree to, right? And then they traditionally are going to need some bank financing or some help funding the deal because they are not usually going to pay cash for the deal. They're going to pay some sort of down payment, 5, 10, 15, 20, 35% down, whatever the case is. And the rest of it's going to be funded by the bank or a bank, an actual true bank in this case, okay? So the bank writes a note in mortgage so that they have security for the debt that they're giving the borrower. So they're giving the borrower, let's say $100,000, and then that $100,000 is going to the title company at the funding table. And then from the funding table, it just gets diverted directly to the seller. So the seller got the down payment and the seller got the rest of the amount. They got what they needed. And then they conveyed the interest of the title of the property over to the new buyer. And then the new buyer also has debt that they owe, right? They owe the bank. So the bank owns the note and the mortgage. So that's what we're talking about today. So that's why the mortgage note is held by the bank and the deed is held by the buyer. So you see that little chain and lock against the house. That's the security against the debt is that house. So if the buyer defaults, the bank can go after the house to get their money back, right? Sorry, I'm trying to find my mouse. So the bank owns the debt. The bank doesn't own the house. The bank owns the debt on the house, right? And the buyer owns the house and they hold that deed in hand. It's a little different than having a car, right? When you have a car and you get financing for it, the person that financed it for you is holding that title, right? Until you make the final installment and then you get the title to the car. So this is how note investing now works. So now you see how the home was created. You see how the mortgage was created and how that transaction happened, which all of us have probably done that at some point, but we're going to look at it from this perspective. Now we're going to flip the script. Let's invest in one of these things, right? So the homeowner, they own that house, right? And the bank, they own that mortgage note. Now we have an investor involved. This investor can be a retirement account. It can be an LLC, a one member or multi-member. It can be a corporation. It can be a trust. It can be an individual if you want. We don't recommend that though. Anybody with a bulk sum of cash can purchase that mortgage note. And so this is what happens. So the cash is paid for the note. The deed never changed hands. The borrower didn't sell the house. The bank just sold the paper to somebody. And that's what we're investing in. We have performing, non-performing, and sub-performing loans. So this is how the transaction, so that's the most important piece of the puzzle here. So the investor is paying cash for that note. And so now the investor owns a note, and guess what happens to that monthly payment? Instead of going to the bank, right? It's now going to go to the investor. So the borrower just knows, they get a letter in the mail that says, hey, look, such and such bought your mortgage, and you're going to be paying such and such bank now instead of whatever ABC bank was. So they pay the same amount. Nothing is different for them. They just simply are paying the new investor. So, and guess what? The investor doesn't pay full price for the note, do they? They pay a discount on the note. So if the note balance is $100,000 the borrower owes, the note investor is not going to pay $100,000 for the note. They're going to pay something below that, right? Let's say $95,000, $92,000, whatever the case may have you. There's some issues with the deal, then obviously the lower the price that you get for it, but the higher quality of the deal, the closer you pay to the unpaid balance. And so that is real estate note investing. Shri, yeah, do we have any non-performing loans or CFDs for sale? We don't have any in our inventory, but we definitely have a couple of sellers that sell them. There are not a lot of them available right now, that last I looked, and they're very hard to come by right now today. And the reason why I say that is they're very high priced. If you come across a really good deal on a non-performing loan right now, it's probably being looked at by many, many different people. And so the non-performing loan space is pretty difficult right now, and there's a lot of competition in it right now. Not trying to scare you away from it. I'm just saying I don't have any in my inventory, and we don't personally go out and look for them for our inventory. But if investors like yourself are looking for them, you know, we have a couple of different sources of inventory where we go and look for non-performing loans, and we can definitely chat offline if you want. Just email me at justin@brightpathnotes.com. Be happy to have a phone call with you and figure out what your buying criteria is. So anybody else on the call as well. Happy to help you out. So moving on to the next subject is the mortgage trends of 2020. So I've shown this slide a couple of times. Basically, it's the mortgage industry update as I see it. So like I said before, Black Knight Financial Data is the company that puts out a lot of information about the mortgage industry right now. They look at a lot of different things. They look at forbearances. They look at, you know, all the major ones, the Fannie, the Freddie, FHA, VA, Ginnie Mae, you know, Freddie Mac, I mentioned that, portfolio loans, all sorts of mortgage loans. Basically, the single family type of mortgage loans is what they concentrate on mainly. So let's dive into some data. So as you've been following us for the last several meetups, you're kind of seeing some trends, and the trends are going in a positive direction for the economy, for the consumer who is the borrower, and for us as the mortgage note investor. All right. Somebody asked a question if they're supposed to be seeing slides. Can anybody see the slides that I've been going through and changing? You should see an October review stats slide right now. Just go ahead and chime in on the Q&A or on the chat board. I'm hoping that it is still sharing correctly. So chime in a yes if you can see all the slides that I've been doing so far. Okay. Awesome. Okay. Cool. Whoever's having trouble with this, I don't know the reason why it's not flipping through on your end. I apologize. I am recording this so that you can watch the recording. If you still are having technical difficulties with this, maybe try and sign out and sign back in if you're having difficulty seeing what we have on screen. Okay, moving forward. So the change in delinquency over here, on my screen, it's the left. I'm sure it's on yours. It's down 3.3% from the previous month. So we're basically getting back down to the change in delinquency rate. This has been the lowest change since March, really, is when we started all this stuff. The serious delinquencies are definitely down. everything is continuing to improve in October. So all this data is basically through October. So it's the complete October snapshot is what we're looking at right now. So there's about 105,000 there's 105,000 fewer past due mortgages than the prior month. So in September, whatever that number was, now there's 105,000 less delinquent mortgages, which everything has been trending since about June. I think is when the tide turned and it started going in the downward direction. So since July, August, September, October, everything is just trending downward, getting more controlled back to what normalcy is, whatever normalcy is, right? The prepayment rate is going up, which basically means that borrowers are starting to repay this debt back and they're starting to get back on track. And I'm going to show some more slides about that here in just a few minutes. So I'm not sure if anyone else is looks at the Black Knight financial data, but it's really good data. They have a full report that they download. Like I said, I just grab a couple of things that I think are important. So this slide, I typically show this slide every time as far as the graph goes of when it was really bad and basically January 2010, when the S hit the fan, if you will. And that's when the delinquency rate shot way up here. Let's just call it 11% because it's really close to that right now. And that's the worst that's ever been. That was of all mortgages that they have. Let's say there's 50 or 60 million mortgages that they're compiling in this data set. That's not all the mortgages right across the country. It's just what they have data on what's recorded. We'll talk about a whole nother shadow inventory that we don't even know about, right? So that's what they record on. So this is what they go off of. So you see all the trends going down. See, it's taking a snapshot in October of every year since 2000 all the way to 2020. So there's 20 little data sets at the bottom. And you see how it's trending downward. As you imagine, everything was getting better and better and better. And then it got to normal about 2015, and then it definitely dipped below normal till about January. I think was the best we ever had. It was 3.22% delinquency rate, which is just unbelievable. As you can tell, right now, 4.54 is normal delinquency based on from 2000 to basically 2005. That's about what the trends were. Right now, we're at 6.44%. So we're definitely getting a lot closer to what normal is. So it keeps trending downward. You saw it spiked up to about 7.75% back in June, I believe, and then it started to slowly trickle back down. So this is showing us that everything is getting more and more controlled, I'm checking out the board right now. Clear my board here. So any questions about that, let me know. I'm trying to read my notes here. So even though we've had about 5 consecutive months of improvement, there's still nearly about 2 times as many delinquent mortgages as there were entering in 2020. So there's still a problem. It's just not at the magnitude that people on social media may have pushed it out to be. So I don't see a large tsunami of foreclosures coming through anytime soon. I do see more foreclosures coming through. That's definitely real. And people are going to be waiting for non-performing loans to come through. I don't know when it's going to happen. I get that question asked a lot as to what I think people should be doing right now. I think it's just holding steady with what you've been doing. Seller financing is really big right now. People are definitely needing help getting into homes and having homes be affordable to them, which means people need to privately invest in these homes so that they can have seller financing created. So I think non-performing loans, we're probably going to see start more of them, maybe as early as the springtime of 2021, but I'm thinking it's going to be later in the summer, maybe towards the next school year, beginning of next school year, that you'll see some non-performing loans kind of come down the pipeline. You'll notice if you see Goldman Sachs and you'll see other very large companies gobble up a bunch of loans, they usually take them and they hold them for a little bit and then they chew them off. They take a chunk of them and sell them to a different Wall Street firm, and they sell them to a different firm, and then they sell them to a different firm. And then it kind of slowly gets down to a level to where we can play at. And that's when we'll see that. So I imagine it'll probably be, maybe less than a year from now. If those of you that are looking for non-performing loans, I think it'll be a better opportunity the longer you wait. So the serious delinquent loans, which are 90 days past due and beyond, they're definitely getting better. So there's good positive signs throughout all this. There we go. There's my button here. So what I thought was interesting during reading this report was looking at the condo townhouse um, situation. So I know I don't have all the slides on here because I don't want to bore you to death with or PowerPoint you to death with everything. But the gist of the conversation was, if you notice, the 2 to 4 family single families and the condo and townhouses, they kind of got hit a little bit harder than the single family did. Now, looking at this graph, you can't tell that the townhouses got hit harder, but you see the 2 to 4 family across the country definitely got hit harder. But what I was seeing a trend was that those rental houses, there was more delinquencies in those categories than there were in just regular single family houses that are just, the non duplex type of house, we'll just call it. So I thought that was interesting. So I noticed that a lot of them were for sale in San Francisco versus single family. It seems like a lot of people in the populated areas are starting to vacate because of COVID and trying to branch off into more rural areas. So I don't know, those of you that don't live like in our immediate vicinity of Indianapolis, if you notice in your areas, if you live in larger towns, if you're seeing people just kind of venture off into the outskirts of that town and just kind of distance themselves from other things. So if you notice that, I think that's going to be a trend that's just going to get more and more obvious as this year ends and the beginning of next year. So I thought that was just kind of an interesting slide. Like I said, I don't want to put all the data on there. Might get overkill and I might have people collapse on me from looking at all the. So this is a fun slide to look at because it actually gives us a status, and my camera's in the way here, of up to November 17th, 2020. So this is pretty recent data. So it's within 20 some days of having all this data. What you take from all this is going to be a positive. I know you see a lot of slices of the pie and you're reading everything on there. Don't get too confused yet. We'll focus on one section of the pie at a time, all right? So this green part of the pie, removed expired performing loans. So what that is telling us is that of those forbearances, 39% of the forbearances have expired and they are continuing to pay. So those borrowers are starting to make their payment and they are caught up and they've reached the end of their forbearance agreement and they have not defaulted in any way, shape, or form. They followed the letter of the law and they're moving forward. So about 40% of them, that's a really high number. What's also good is that, where's it at? So the 9% down here, this gray part of the pie, that's paid off. So you can imagine with all the refinances going on right now, it's been a good thing for the mortgage business. And the cherry on top, the fact that real estate is really still appreciating at a good level month over month, has helped the tappable equity. So as people were having issues paying their mortgage, the value of their house was still going up, even though they still owed this. So they had this much spread in there to be able to go out and get another loan, pay off their other lender, maybe lower this payment a little bit because their percentage rate may have went down 1 or 2%, and they're able to make it more affordable for them. So it's all good things. So you add that 39 and you add that 9% and you get about whatever that number is, 47, 48%. That's pretty good amount of loans that are in the positive. There is also the 7% sliver, which is, it looks like something bad, but it's actually something kind of good. So the people that are in active loss submit, they're not truly in forbearance. They're not in foreclosure, but they're also haven't paid yet. So what that means is the loan servicing company is working with the borrower to try to find out, can we remodify your loan? Can we do a deed in lieu on it? Can we forgive some debt and do another forbearance on it? And so that's where they're at in that process. So they're not totally lost to the dark side, if you will. They are still in good. So there's a good amount, let's say 50 to 55% of these loans that are in forbearance, they end up having a good result from that. So these are all good things. So we're not looking at a tsunami of foreclosures coming through at the end of this pipeline whenever it ends. So you notice a lot of them have extended, 35% of them, and then 8% of them are still in the original forbearance terms. So they may have came to the party late, maybe in late summer, and they started their forbearance, okay? So hopefully all that information was good and you were able to understand that. Where's my next slide here? All right, so this is the last slide that I have on the data, and you're probably cheering in the background saying, move on. So, but what this shows is kind of what I wanted to focus on is just this data set that I circled. I didn't mean to do the foreclosure part of it. I wanted to focus on the delinquency so you guys can see, sorry about that. So you guys can see the data for 12 months as far as the delinquency rate. So there are delinquent loans and there are non-current loans. So non-current loans are just anybody that hasn't paid, but the delinquent loans are anybody that hasn't paid, past the 30-day marker. So you notice October 2019, a year ago, is 3.39%. And then right in January of 2020 is 3.22%, which was the lowest I've ever seen it before. And then it slowly started getting worse and worse. Like we talked about, I guess it was May. I said June earlier. I guess it was May when it spiked at 7.75. And you see it's slowly been trending downward and downward and downward. So if you also notice, look at the new originations. I should have circled this for you guys as well. Sorry about that. The new originations. So last year around October timeframe, not December timeframe, there was about just under 1 million new originations. And then the originations got less and less. And you would expect that during the colder months, right, to get slower with originations and then jump back up when real estate gets hot again, when the March, April, May timeframe, when school is getting ready to get out. And then look what happened in September. Almost 1.5 million new originations. I don't know what October, November numbers are going to be. Then I'm sure they're going to be a lot more than that. But that's pretty amazing. So you see all of these refinances going on are just helping people stay true and current within their mortgage. That's what's helping a lot of what's going on right now. Also would have been a lot worse, especially if our real estate values went down. This whole situation would have been totally different and may have been closer to like the 2009 financial crisis. So that's what this data set is. That's what I like to show. And so I see all signs in a positive direction. It's not going as fast as we would want it, but it's definitely trending in the right direction. And I think it's going to be stretched out maybe another 6 to 8 months like that until things are going to get really under control and what we'll call normal, right? All right. Oh, Shree, I didn't know you had a meetup. That's awesome, man. I'm glad that you covered that stuff as well. We'll have to get together after this. Send me an email, my friend, Justin@brightpathnotes.com. Love to chat with you. So are there any other questions about, oh, I'm sorry, I missed one from Susan. So new originations. So new originations are basically, I'm not sure if they're including refinances in this category or not, but new originations are where if you have a mortgage on your house and you want to go and refinance it with a different bank because, hey, their rates are way better or somebody's giving you a great rate. I think that's what's falling under that category is new origination. So it's basically like they're taking their loan and they're basically wiping the debt out and at the same time replacing it with new debt from a new bank and a new lender. And so I believe that's what's in under that category as well. So hopefully that explains it, but it's basically writing a new loan. All right. Moving forward. So has anybody ever heard me say mom and pop loan or mom and pop note? You can chime in on the chat box if you want. So in the note business, we have paper that we buy, performing, non-performing, sub-performing, from institutional sellers, and we have them from what we call mom and pop sellers. So mom and pop sellers, a million times, thanks. Mom and pop sellers are folks like that usually have a couple of rentals or they invest in real estate here and there. They couldn't sell the real estate, so they sold it on terms. And they thought they knew what they were doing, and they understood a little bit about finances and a little about loan creation, but they don't do things the right way because, quite honestly, they just don't know what they don't know, and they don't know what questions to ask. So we call these mom and pop notes. They usually have 1 to probably 5 or 6 loans they create on their real estate or their rentals. And they create this paper. So we call them mom and pops. They're not a professional seller or a professional originator. They're just an average investor, and they just don't have the proper training and education on how to structure these deals the right way. So when we see mom and pop notes, they are typically going to be discounted a lot more than buying from an institutional buyer because of all the problems that come with them. and all the problems that come with them, you learn very quickly after doing many of these exactly how to do your due diligence. So it's a little bit different, and it's a little more focused on like when we do non-performing loans, where you really have to vet almost every part of the note to really make sure that you have a good sound note. And we'll kind of get into some explanations. So anybody on the call that's created a loan before, a mom and pop loan, if you fall in the mom and pop category, I'm not trying to make fun of you. It's just, you don't know what you don't know. Some of you just go straight to an attorney, and that the attorney knows everything and they just rate a great one for you. And that's awesome. And some people to go to, is it LegalZoom? People have been on LegalZoom before, and they'll create documents that may not even pertain to that state. And so I like to use attorneys in that state to draft the documents because I don't even want to take a chance. So when you're doing the due diligence on a mom and pop note, so you have somebody that says, hey, Justin or Mr. and Mrs., whoever's on the call tonight, I want to sell you this land contract or this contract for deed or this note and mortgage that I created. I want you to buy it from me because I just don't want to deal with it anymore. Or I'm seeing a lot of that right now. A lot of people want to get rid of their paper for whatever reason. And I like to see that because I like to buy it. But I had to vet it very, very heavily. And they take a while to purchase because there's a lot of steps going on. I can't remember the last one I did that was very clean and very concise and very easy for a transaction. They typically have a lot of loose ends you have to tie up throughout the whole process. So they typically take me probably 30 to 60 days to close on, just for going through all the process and having people sign more documents. And we'll kind of get into that specific. So the security instrument is like the land contract or the contract for deed or the note and mortgage, whatever instrument they use, the deed and trust in some states. The pay history, that's probably pretty important. Well, you darn right that's pretty important. If they're not paying, they no stay, right? So you want to take a look at that pay history to see how they've been paying and see what they've been paying with, check or depositing cash, or how the seller's been collecting that, and how are they tracking the unpaid balance? Are they they're more than likely not using a loan servicer. And so it's really hard to prove exactly what is the true unpaid balance. So you have to be really careful with that. And sometimes we have people that have to sign an affidavit of exactly what the balance is and have the borrower agree to it. That's not out of the ordinary. Insurance. You wouldn't believe how many times I've run into people that don't know that the insurance isn't being paid every year. So the house isn't covered. So what happens if that thing burns down? No one's going to be able to pay off that debt. So it's very important that you get that updated declaration page for the insurance policy to make sure that's being insured properly as well. And if you don't know if it's being insured properly, just show your insurance agent for your house and be like, hey, is this being covered as well as it should be? Or an agent in that area, right? So the seller is probably going to be either an individual, so like a John Smith or Justin Bogard, or it'll be like a Bright Path Notes or a Oreo Cookie Enterprises. I don't know why I said that. Maybe because I had Dairy Queen today. So you want to discern if it's an entity or if it's an individual, and that's going to give you another layer of due diligence that we'll get into the next slide. Okay. You'll know why it's important. Escrow, are they escrowing for taxes? Are they collecting for taxes? Are they collecting for insurance and then they're paying it on behalf of the borrower? Oftentimes these people aren't even having good accounting records to show like what should the escrow balance be. So that's really important to look after, right? Because when you purchase it, you want to make sure you get that lump sum of money because you need to start paying the taxes and the insurance for them if they're escrowing the account. The borrower is paying all that stuff out of pocket outside of an escrow, then obviously it'd be great if you can get them to escrow, but you can't obviously mandate that. It needs to be set up at the beginning when you originate a loan. The borrower information. So sometimes when I'm working with institutional investors that are helping me fund some of these deals, they can run social security numbers and kind of get their credit score. There are different ways that you can get a credit score on a borrower. You can have them run it themselves and be like, hey, go to Credit Karma or whatever the site is and say, hey, just enter in your information, print a report, I know it's going to cost you $20 or whatnot, and then hand it to me so then I can go through your credit report. Sometimes you can work with another partner or whatever that has the ability to run credit and they're licensed and compliant, can do so. And you can get the borrower's permission and you can run that stuff that way. So sometimes you need a social security number, do that stuff. You definitely want to get their phone number, want to get their mobile phone number. You want to get their home number if they have one. You want to get their email address, and you want to find out where they work and maybe get that work number too, because you want to make sure you can get a hold of your borrower, or your servicer can get a hold of your borrower if you need to. It's not good enough just to have a mobile number and an email address. You want to have multiple ways to get a hold of them, because you'd be surprised if people duck your phone calls, right? So I try to get all the information I can, try to find out information of where they work, what they do, if they have a trades background, if they're skilled laborers, maybe they can add value to the house. And that could be some of your bartering back and forth with them if they ever have a difficulty in the future. So that's all good information to get, and I highly encourage you to get that. And then you're kind of ready to order a title search. I think you all kind of know what that is. If you don't know what it is, that's okay. I'll explain it. So a title search is just going out and ordering from a vendor, like we use Dickey Baldwin, and they go out and they find all the recorded documents on this property, and they look and see if there's any liens that are going to be above you or beneath you, or if there's any judgments against the property or against the borrower. You kind of find out all that information, so you know if there's going to be a problem that needs to be fixed, and you work with the seller and you can get that fixed, right? So then ordering the property inspection or the BPO. If you don't know what a BPO is, it stands for broker price opinion. It's basically where a real estate agent goes out to the property, they'll take some photos, and they'll compare it to other sold and currently listed properties in that area. It may be next door neighbors, or it may be 10 miles apart, depending on where this property is at. They do the best they can with the information that's on the MLS. We don't get BPOs typically unless they're under about $80,000 in value, what we perceive the value is. We find that a lot of real estate agents are just getting stuff off the MLS, and more than likely, those comparables are cash sales. We call them cash comps, because the banks aren't lending below a certain amount of money. We'll say $100,000, $90,000, $80,000. They're just not lending because it costs them too much money to lend somebody money at that price point than it, as it does $1 million loan. It costs them like the same amount of money, like $4,000 or $5,000. There's a cost to it, and they have to be like, look, we're going to lose money if we lend you this money, which is crazy to think, but that's what it is. Which is why private financing, seller financing, is so popular and so needed in the areas of the sub $100,000 price range home. So Justin, how do you find the value of a home if it's under $80,000 and you get a property inspection? Well, we use rental data and just do the backwards approach of trying to figure out what would rent income be on this property, and just multiply that by the local capitalization rate. I know I'm using a lot of big words here, but there's a way to calculate what seller financing value would be for that home, because that's what you're comparing to, and that's what the value is of that home. So just doing this 1,000 times, I can look at a property and know about, based off the rent, about what it should sell for with seller financing. So if you see a property that's pristine condition and it says $10,000 from a BPO, but it rents for $900 a month, it's not worth $10,000. It's worth a lot more than that. All right. So I talked about this before on the last slide. The entity as the seller. So this is where you actually want to dive a little further into due diligence on the seller. All right. You really need to, when you're dealing with a professional seller or a hedge fund or an institution, you don't have to vet them as much as you do an individual. Because then again, like setting up a note and mortgage or a land contract, they just don't know what they don't know. All right. Rules have changed. Dodd-Frank is out there. The CFPB is out there, the Consumer Finance Protection Bureau. And there's just different rules and different things you need to be aware of. But one thing I've come across that's actually, I wouldn't say common, but it's something that I've really been focused on the last couple of years of checking with the seller, is who can sign. Who can sign on behalf of your LLC? Does anybody on this call have multiple member LLCs? Is it spelled out in your agreement who can sign for stuff and who can't sign? Check your articles and check your operating agreement. Oftentimes I have to look at these and go, can this person even sign over the note to me? It's important to know. Is the entity in good standing? We've dealt with a couple of sellers before, not this year, and a couple of years ago, where they had let their, in Indiana, so those of you in Indiana, we know we have to, every 2 years, we have to turn in our entity report and to make sure we're in good standing with the Secretary of State. And it's just a $40 price tag, I believe, and a report that you can just fill out quickly and just submit it. I think it really, it's not a report. It's like updating your principal address and the principles of the business and such, your registered agent, and then you just turn in. So if a company isn't in good standing with the Secretary of State, can they really sell that asset? Okay. You have to be careful with that stuff because we've seen that before, and we have to be like, look, you got to get your LLC in good standing or else we can't buy it, because that means you don't have a valid checking account, right? So how can we give you money? Because then this loan could be just wiped away and I could lose all my money, right? So there's just really odd things that you wouldn't think of, but you really need to check that. So who can sign, and is the entity in good standing? There's easy ways to do that. So what if one of the members of a 2-member LLC passes away? Have you had this happen to you? Have you heard about this? It's happened to us recently. And so what we found out is that in an operating agreement, which is why you want to read the operating agreement or the articles or whatever they have, it spells out that if a member, should unfortunately pass away, all their stuff basically goes into a trust, which is great, which is what the member should be doing. But can that trust sign on behalf of the LLC? You have to make sure all these things are spelled out to make sure when you're buying this note from, especially from a multi-member LLC, or if it was a one single member LLC that went into a trust, you want to make sure everything's spelled out correctly to where they can sign on behalf of things. So that's important. So check your articles, check your operating agreement. So the solution, like I said, is basically you have to have like, I think the last time I used one, it was like a word of managers, just a short document. You can have any attorney draft this up. And basically it says, I, such and such, whatever their name is, am a part of this group, and such, I declare myself as the president, and I can sign. The trustee declares himself as the vice president, and you basically spelled out line by line exactly what you want going on. So you have, both the member and the trustee sign it, and then it's all written, it's all good, right? So what if, so I got my little animations out of order, don't I? Have you really read the note? Those of you that are note investors on the call, those of you that haven't been in note investing, you probably don't understand this question yet, but a lot of times people that get into the business, they don't really read the note. It's long, it's time consuming, but it's very beneficial if you read it, because there's a lot of things in there that could be wrong. There's a lot of things in there that could be to your favor, right? So what if the monthly payment is incorrectly calculated on the land contract or the note? What do you do? What if it contradicts what the amortization is? What if the maturity date is wrong on the note, right? What if it's 1 month before it actually is supposed to be due? What do you do there? What if the taxes and insurance is included in the principal and interest as the payment? What do you do there? How does a judge look at this document? If you were foreclosing on this property and you had this contract and it had these problems in it, would you think a judge could easily discern exactly what's going to happen, or what the payment status should be, or what the unpaid balance should be, or what they should or shouldn't be paying? You better darn believe you want to get that fixed before you buy it. There's a solution for it. The solution is you basically have the borrower and the seller of the note, or the entity signing on behalf of the note, write an addendum to fix it. It's very easy to do. You just write an addendum and you just have them sign it, and you have them notarize it as well. And that's how you fix that solution. So there's a lot of times you'll find a lot of problems with these loans, little annoying little problems. And even though you never have an issue with this borrower, even though you never worry about foreclosure, it may never happen to you, that's great. But this little document, right when you buy it, will save your bacon if you ever have to go through foreclosure, and just protects your interest in the note. So those are little things that I've come across the last couple of years. I wanted to kind of put out there because I believe that all of us are going to see more of these mom and pop notes available for sale. And I want to make sure you know what I know and what I've experienced and what I practice and how I do my due diligence on some of that stuff. So that's just a light dive into it. I just want to make sure that I got that out there for everybody. So I was going to check the board to see if I missed anything. I think I'm good right now. We got a lot of good attendance tonight, so I appreciate everybody coming out on a Wednesday. Hope you like my hat. So now it's time for Ask Justin. I couldn't think of something catchy to say, so I just said Ask Justin. So this is your time to basically be kind of like an open mic right now. We're already an hour into our conversation today. I don't like to go for 2 hours on my presentations just because it's exhausting, and I know you don't want to listen for 2 hours, but I felt like this is a good stopping point to basically have whoever's on the call tonight just to say, hey, Justin, I'm dealing with this problem, or hey, you said something earlier about this. Can you dive into that a little deeper? We can unmute you. We can have you on the call tonight, and we can do that. So feel free to shoot questions in on the Q&A, and I'll kind of talk through them. And if I'm not sure if I'm getting my point across or not understanding, we'll definitely allow you to speak and all that good stuff. So use the Q&A for it. While you're doing that, and I see a couple people filling out some stuff now. So starting in January, so January 13th is going to be our next meetup, and I have a slide that talks about that. I can just advance that now. So Wednesday, January 13th from 6 to 8. So what I'm going to do going forward in January and for every time I do this meetup is I'm predicting that I'm not going to be live in somewhere locally to be able to do this for a while. So we're going to continue to do an online platform. And what I'm going to do is I'm going to use a platform called StreamYard. And so it's basically going to be, you guys can get on my YouTube channel or my Facebook group or my Facebook page, and you'll be able to see the stream of this meetup live. So you'll be able to comment, you'll be able to see it, and it'll be, recorded, and it'll be archived within those platforms right then and there after we're done with the call as well. So that'll be a new way we're going on that format. That way I don't have to have the Zoom, I don't have to record it and then re-upload it and all that stuff. So going forward, we're going to be doing that. So when you see emails from me, if you're not on our email list, we'll be shooting out the links to log into. And so you don't have to really register. You just kind of go there. So we don't have to worry about if we have 100 people or 10,000 people. Anyone that goes to our YouTube channel or Facebook group can be able to watch the meetups and be a part of it as well. So it'll be great. So anyways, all right, we got a couple people already chimed in. Let's see the first question here. Hope you don't mind using your name, so I'll just use it. So it says, Elliot here. Do you do consulting at an hourly rate for new note buyers around helping with due diligence and glancing over the notes like a second set of experienced eyes? I'm a new investor, and I would be interested in learning about what that I would need to look at when I stumble upon deals. That's a great question. And people like myself are supposed to be doing that for people like you, as far as just being a second set of eyes and helping in the business. I don't necessarily have an hourly rate for that. It's just more or less, it depends on how much time I need to spend on it. I'm happy to dedicate some time at no cost to you just to help you through a deal and stuff like that. But if you definitely want me to be more involved, we'll figure out some sort of arrangement that I can help you with. But I'm definitely here to help you and answer your questions. And using our Facebook group that we have for the Real Estate Note Investing Be the Bank Meetup is a great place to ask questions. Myself and 3 other people are moderators on that group. We have a couple other seasoned people within this group that can help answer questions. So in the future, you can do that as well. But I'd be happy to be your second set of eyes on a deal and look it over. And I probably know the seller if you're buying from an institution. And so I can help you with that as well and let you know if it's a company that I've heard of having challenges with or a company that, is virtually really good to work with. So I'd be happy to do that for you as well, Elliot. Just reach out to me, Justin at brightpathnotes.com. We'll connect and we'll get you taken care of. All right. All right, Jasmine. Yes. So your question is around, can this be done in a retirement account? I didn't really talk about this specifically. I kind of just glossed over it, and I apologize about that. I should explore that a little further because most people are investing in their retirement account. So if you've heard of a self-directed IRA, which you put that in your chat, you're welcome, Elliot. That is a company like, Equity Trust, Quest Trust, IRA Services, there's a lot of them out there that are specific to allowing you to invest in real estate fix and flips, rentals, lending, and purchasing mortgage notes, right? So you can do that. And we highly encourage people to buy performing loans in their self-directed retirement account, especially when it's a Roth, because it's just growing tax-free. So we definitely encourage that. And it's definitely something that you should do. And there's special rules, mistakes, or anything in particular to watch out for. Well, you're using a self-directed company. You basically you have a shield around you to protect you from doing any, what's the word they use? I don't want to say disinterested. It's prohibited transactions. So meaning like if your wife or husband gets involved, or your children or your parents, or whoever, a business partner, you want to have a shield around you and protection. That's what the self-directed IRA custodians do for you. Now you can take it a step further. You can take those retirement accounts and you can put them now in a trust. And then you can commingle a couple of them together, but you have to have a trustee. So that's another conversation that we've had before that gets tangled in the weeds. But to answer your question, yes, you can all do all this in a self-directed IRA. And just reach out to me at justin@brightpathnotes.com if you want to have more questions answered. If you want to extend this conversation further, I'd be happy to do that for you. But the things to watch out for are, there's a few things to watch out for, but basically if you're buying non-performing loans in your self-directed IRA, it's a little bit more risky than buying performing loans. I believe. Don't want to scare you away from doing it, but you just want to be a little bit, there's things you want to look out for. So off the top of my head, you don't want to do any prohibited transactions is probably the number one thing. And you don't want to be caught being a dealer per se. So you don't want to be flipping a bunch of no loans in your retirement account. And there's other things like that. But if that is not your intention, then you don't have to worry about it. Okay. So if that answers your question, cool. And feel free to chime in with other questions if you got them. All right. Hey, Jim, long time since I've talked to you, my friend. You've been to several of our meetups in the past before. Jim says, I heard lately about creating seller finance notes. What would be the best format for us to create good, safe notes or noters? That's why you changed that. So the best way to write a note is to underwrite your borrower. You don't have to if you do less than 3 of these a year, but you just should, because I think it's the right thing to do. It shows your borrower has the ability to repay the debt. And that's what you want to show a judge in the future, that you aren't a predatory lender. You weren't trying to go after them in an ill manner. So writing a note in mortgage as opposed to a land contract is the best. If you have debt currently on that property, you probably don't want to write a note in mortgage around that note in mortgage. It gets very confusing with taxes and insurance and escrowing and stuff. It's just best if you have a note in mortgage on a property and it's your investment property, and you want someone to buy it from you, you're just better off doing a land contract and wrapping that around that note and mortgage. That's one of the few times you'll hear me say use a land contract. But if you own it free and clear, or if the down payment is going to pay off the underlying debt, you want to write a note and mortgage. That is the number one rule. If your state doesn't allow note and mortgages, maybe it's called a deed of trust or whatever in your state. But in Indiana, it's a note and mortgage is what we call it. So hopefully that answers your question, but that would be a very safe and Dodd-Frank compliant note when you underwrite them and you create a note mortgage. Okay. Let me know if that doesn't answer your question, Jim. I'm going to clear the board here. Okay. What is the best entity to buy and sell and hold notes? A C Corp, an LLC? I'm hearing a lot of investors are using C Corp. So the tax rate is only 22% versus LLC tax rate at your personal tax rate. What have you seen with your experience? All right, Derek, that is a very good question, and it's multifaceted. So what I do is I use LLCs for my purchasing and loans. My LLCs aren't S Corps or C Corps. We do have a holding company that's kind of the parent of all of our LLCs. That is an S corporation, so that we can take payroll and get the best deductions. I don't know with the new rules and regulations. I haven't talked to our tax person in a few months to find out if the C Corp was going to be a better option or not. Typically in the past, C Corp has not been the way to go. The S Corp has been the way to go. And maybe you got that wrong, or maybe that you intentionally said C Corp. I don't know for sure. I'm definitely not a tax consultant. I'm not one of those guys. I think you know that. But in my experience, and thanks for alluding to that, I've been using an S Corp as my holding company. And then my other operating companies, if you will, just been regular LLCs, member, couple member or one member LLCs. And that's how we've been doing that. You're welcome. So that's what I've seen other investors do. And thanks for bringing up about that tax rate for C Corp. I haven't been caught up on it. And like we started doing payroll a couple of years ago, last year. And so that's why we changed over to an S Corp to help lower that liability as well. So glad we can answer that question for you. Good question. Okay, Shri has a good question here. I'm looking to newly originate a second lien with 3 months of payment history. Seller is not using a licensed servicer. Do you have a checklist of items you look for? So we don't get very heavy at all in the second liens. So if there's a tweak or something specific about a second lien, I'm probably not the best person to answer that question, but I'll answer it as best as I can. And so what I think what you're saying, let me rephrase your question. So there is a first on this hypothetical or this real property. Okay. Yeah. Let's go ahead and get you on the speaking on here. I'm going to free you up here. All right. I got you. Yeah, I can hear you.
How are you, Justin?
I'm doing great. How about you?
I'm good. So basically, I already checked the status of the first. Chase is the lender, so they have current on the first, and CLTV is less than 100% when you combine first and second. I generally buy institutional paper first and second, very less seller finance paper. So this one just came about from my marketing, and the seller wants to sell the second lien. He just originated it. I'm getting at a good yield, but what I don't know is since it's not, I never bought a loan where the loan was not boarded with the servicer to verify the payment history and all of that. And obviously, he's not using a servicer. He didn't use an RMLO, although the property is owner occupied, right? So I've never been in the situation where I'm buying a note where there's no RMLO to underwrite the loan, to qualify the borrower, and also the payments are just copies of the checks that you received. I do have the employment information of the borrower. That's all I have, basically. So the property is in New York, so I'm actually going to use a New York attorney to verify that info. Yeah.
I'm glad that you hopped on because that explains a lot more detail than I was reading it wrong. So I was reading as if you were going to originate the second lien, and maybe I just read it wrong. No. Wrote it right. So there's a first on the property and there's a second, and the guy that's selling this note is keeping the first and he's selling the second.
The first is, thank you. The first is actually with Chase. So he just gave it. It's one of the family members. He gave the second loan. What is a little fishy is, it's not fishy, but I'm concerned about is,
yeah, the
balance is 105. After 3 payments, the balance is about 103. He's selling it to me for 30 grand. So, like, you just rotated 3 months back. Why are you selling with a $70,000 discount? I mean, I get it. It depends on the yield. Yeah. But it just sounds too good to be true. So
yeah, it does sound too good.
I'm like, okay, what am I missing here?
Yeah. So, yeah, it does sound a little fishy. And I think for a checklist of items, you're doing what you can. You start off with, you found out that there's no RMLO involved. You found out that nobody is servicing that second loan. So you're trying to verify what's going on. You have copies of the checks, or someone's given you copies of the check to show that. That's still okay. It's not anything bad. It's you obviously would prefer to have a servicer. It just makes things a lot easier. But those are things that are annoying with it, that you definitely have a discount in there. And you said was the second, it's $100,000 second. They're selling it for $30,000. Is that the round numbers you just threw out?
It's 103 is the 103 is the total UPB right now. And I'm getting it for 33.5. Did
the seller tell you they have motivation to sell it to you at that price? Is that, or they just said?
Yeah, they were at 60,000 initially.
Uh-huh.
And what they were quoting, the property is worth about 600,000.
Okay.
And the first lien they said was, I mean, they think the price is 400,000.
Yeah.
I don't know if they looked at Zillow or what. And I used comps in the local area with a realtor and got the values, and I verified it too. Um, so the first lien balance is actually not 200. It's like 297. And when you combine 297 plus 105, it's 400. So I said CLTV is almost 100%, but the property value is close to 597, 590. I mean, even at best case scenario, it's definitely 550, right? Initially, they were asking 60 grand for it.
Yeah.
And when I found out, when I did the, value of the property, then I said, hey, I'm close to CLTV 100%. I can't buy it at 60. What can you do? And I wanted to check their motivation. I threw in a number, 30,000. They said, can you do 33.5? I said, sure. There might be a reason why they're asking 33.5. Maybe they need that money for something. I don't know what it is.
Yeah.
But that's where we are.
I think your radar is pretty accurate. It was sniffing something out there, and something does seem off. It still sounds like a great deal, obviously, and obviously you're an experienced note investor, and I think you know that. But yeah, as far as like answering your question about a checklist, I mean, you're doing the right things. Like you're looking at the pay history as details you can. You're understanding the seller of that note, and maybe get some more background on them. And is it an individual name? Is it a company?
It's an individual. He did use an attorney to close.
Uh-huh.
The mortgage is recorded in the county,
Yeah.
and I have the copy of the note.
Yeah. It
So,
sounds like, yeah, having that, you said you're having a New York attorney also verify some things as well.
yeah, I'm actually waiting for pro title report. It should come in by Friday. Then I'm going to send everything to the attorney, because if I send it to the attorney, he's going to pull the title anyway. So I thought I would actually pull it and give it to him, and let me give the whole package so that he can look at it and make a call.
Okay. Yeah. You're taking on the right steps. I mean, it sounds like one of those gunslinger deals for me where I just feel like, well, somebody owes me 100 and I can pay 30 for it. I mean, what can go wrong if the value of the property is worth a couple 100,000 more than the combined LTVs of the first and
Yeah,
second? It sounds like a pretty good
right.
deal to me, but yeah, I agree. Something is fishy about it. And then just once you peel back the layers each time you do something, you might discover some more things. So
Right.
yeah, but I think
So
you're right. Looking into
more
the
specific,
employment history of the borrower and finding out if there's a problem with the borrower, that
right.
might give you the answer.
Okay.
Yep.
Okay. And from a payment history perspective, when you buy seller finance notes,
Hmm.
if there's no servicer, what do you go by? Are they giving just copies of the checks, or what do you check? Do you ask them to give bank statements where these checks were deposited? What do you ask?
Yeah, I look for all that stuff first. I ask them, how can you prove they made payment? Because I'm gonna need to know that. Right? I can't. I love you. I like you. I trust you. But I got trust but verify. So I need some sort of documentation to show me that they made these payments. When did they make these payments, and how much were these payments for? And so I look at
Okay.
bank statements. They give me copies of the check, which is great. But I still need to see bank statements where the money is deposited, how much was it deposited, and where's it going. And then they're going to
Okay.
sign an affidavit. I'm going to have them sign an affidavit and have it notarized, be like, yes, those payments came in on this day, and I swear I'm verifying that that is true and accurate. And sometimes you have to get on the phone with the borrower and be like, hey, I just want to confirm with you, I'm buying this debt, and I want to make sure this is accurate. Do you agree with these numbers? And then have them agree with that as well.
Right.
So it's okay for you to reach out to the
Do you
borrower.
happen to have a template? Do you happen to have the template for the affidavit that
Yeah,
they
I have
want
a
to sign?
template for that, what I just talked about. The
Okay.
payment
I'll
history
send you an email
affidavit.
if it would be, yeah. If you could share it, that'd be great.
Yeah, absolutely. Yeah, send me an email, justin@brightpathnotes.com, and I'll share it. I'll share with you what I have. It probably has my branding on it. You have to take my branding off and put yours on it. But
Yeah. Yeah.
does that answer your
Thank you,
question?
Justin. I appreciate it.
Oh, you're welcome, man.
Yeah, you
Anytime.
did.
Thanks for
You
being
did.
on.
Yeah.
You got it.
All right. Thanks.
All right. Thanks everyone for staying on. We're still shoot some questions out to me if you need to. Still be on for a few more minutes, but like I said before, January 13th, 6 to 8 p.m. is our next meetup. If you haven't done so already, those of you new on this call, you join our Facebook group, Be the Bank Real Estate Note Investing. It's got this logo in the background, the Be the Bank logo. That's how you know you're in the right Facebook group. And so we have several people on there. We got a lot of people that are very knowledgeable in notes and can definitely help answer your questions. So we're going to go ahead and stay on. We're going to end the recording right now for those of you that are listening to the replay. And the rest of you, feel free to stay on. So those of you on the recording, until next time, we'll see you in January.